Hello and welcome to another technical analysis tutorial. In this tutorial, we want to take a look at the engulfing candlestick pattern. It is a pattern that I really like to use. It is very reliable, not completely reliable, and it doesn't work 100% of the time because nothing does. But we are going to take a look at a few examples, take a look at what actually the engulfing candlestick pattern is and how you can use it for trading. So let's start here at the first example. I've marked a few examples out on this chart. Engulfing candle means that the body of one candle, in this case the red candle, completely engulfs the previous candle, the previous price action. And you can see that very clearly here. That body is much larger. It starts at a higher price and it closes at a lower price. So this indicates that we have at least short-term bear trend. So that is, for some traders, that would be an entry signal when that candle closes to go into that direction, maybe to short the price. And it even gets more interesting and, in my opinion, more clear when you have a long wick, a fairly long wick into one direction as well, like this one starts at the top, just indicates that the price already tried to push higher, but there was strong seller support or selling pressure, and the price was just pushed down further. So as you can see, the price then dropped from up here, actually 152 to down to $1 nearly. So someone who would have entered the trade here maybe at 146 would have then made some nice profit potentially, and would have then potentially seen the other trend in that direction. So that's something like a doji candle here, which indicates another trend shift into the other direction. Some traders might have exited here already because of that strong push by the buyers. Yeah, so because that goes exactly in the other direction. But this just shows that this body of the candle completely engulfs the previous candle. It means that the selling pressure is quite strong, and also it nearly engulfs it actually engulfs the previous candle as well. So it engulfs fully the price action of the previous two candles of the previous 2 days, because we're on the daily time frame. Now there's another example here which goes in the other direction. Basically what you can see here is that this body of this candle completely engulfs actually the previous 1, 2, 3, 4 candles. So in my opinion, and that's what I've found over the years, the stronger the engulfing pattern is, the more reliable it can be used as a trading indicator. Because what you can see, and always I always urge you to not only look at this one candle, but look at it in context. Because what you essentially have here as well, you have a very, very strong buyer support down here. Yeah, so you could already, this was a first heads up that something might be changing. The trend was slowing down. Yeah, you probably had something like a bullish divergence forming here as well on the RSI. And what you can then see, long lower shadows, and then you have that engulfing candle, which indicates that we might be pushing for a move to the upside. And then over here, this candlestick confirms that. So this one candle completely engulfs the entire previous price action. So we have an engulfing candle here, it goes up. And yeah, while this is a red engulfing candle, I urge you, as I said, not always just to blindly trade one, but see how on the lower time frame, then you can use the lower time frame and take a look at where you can find an entry. Maybe there's a pattern emerging, but for example, if you see that red engulfing candle, but the next candle starts in the green, I wouldn't enter the trade. Now what you can see here, we have a huge red candle, and then you can see a huge red engulfing candle, and you can see how that then develops into that direction. And then up here again we can see that trend direction shift with another engulfing candlestick, where we have that red candlestick really engulfing the previous price action. And you have another indicator, which is that long upper shadow here. So again, there was a strong attempt by buyers to push the price higher, but the selling pressure was quite high and pushed the price down. Then you have an engulfing red candle, and some traders in addition would have probably seen that the price action was slowing down on its way up already, with these long wicks here to the upside. So on a lower time frame, you would have seen that better. So that is always a first heads up. If you can see, if you're in an uptrend and you see these long wicks or long shadows at the upper side of the candle, first heads up. If you then get a candlestick, an engulfing candlestick pattern, that's like a confirmation that we might be heading into the other direction. And yes, we clearly were. So you could clearly see that. So do we find another example? Yes, we can find one here, another engulfing green candle, completely engulfing the previous candlestick. and we were actually moving. It's a bit hard to see, I need to make that a bit larger, but there would have been a trade entry possibility here, and then you could have exited up here, for example. There's another one here, you can see another one more clearly, actually completely engulfing the previous one and an element of the one before that, and then that was pretty much the start of a longer term uptrend. You can clearly see that. Then you have a short term correction here and another engulfing candlestick when the push to the upside starts again, and then very clearly we had a very long term uptrend here and no engulfing candlestick since then. There was one more here, so you could have exited there if you wanted to, but then as I said, don't blindly just exit. But it would have actually been a good exit here at some point, because you can see that we rolled over, then the market started to roll over, and the last heads up would have probably been, had you stayed in the trade because of that long candle, then the last heads up would have probably been that long upper shadow here, where you can really see that the price cannot really push any higher, and then the market rolled over, and that's where we are now. So there's a few examples of some really good engulfing candlestick patterns, really good trade entry possibility, especially if you combine it, for example, with moving averages. If you know that we are in an uptrend anyway, based on, for example, higher time frame moving averages or same time frame moving averages, if we're in the daily, and you can see a green candlestick pattern, we are in an uptrend based on the moving averages. You have a green engulfing candlestick pattern. That is a lot of confirmation already. And if you then see, like here with that one, for example, a fairly long lower shadow as well, that's really good information that the buying pressure is quite high, and you can take volume into account as well. We had a lot of volume here as well going up, so this would have been a good entry potentially, and yes, indeed it was. It would have provided some great opportunities. So that is pretty much the engulfing candlestick pattern, and hopefully that video was useful to you. If you liked it, please smash the like button, and if you want to follow me on this TA journey, then please subscribe. Thanks a lot for watching. Bye bye.